the cost of living generally is increasing, right? As you can see, we have high inflation at this point in time, right? Which automatically means that everything from fuel, from food, from housing, from everything, the cost will increase, and it's increasing, right? And what makes it worse right now is that there is interest rate hikes, which makes life a living hell for some people, right? So in this video, we want to break down, if you are struggling to pay up your bond, what you need to know, right? In this channel, as you know, we talk all things real estate, all things personal finance, so that you are the driver for financial life, not just the passenger. So let's get to it, shall we? So there's so many people right now that are struggling to keep up with their bond repayment due to the ever-increasing interest rate, right? So what makes this worse is that there's a slowdown in the housing market, right, generally, and it has become difficult to sell, especially if you have a wrong pricing of your house so that you can get out of that debt, right? But if you incorrectly price your property, it's going to be difficult for you to sell, because buyers have a low affordability at this point in time. Because if the interest rates are high, it means that the buyers have low affordability, which means that it is very, very much expensive to actually borrow money. Unlike in the time just immediately after COVID, where it was very, very cheap to borrow money. So most people at that time could be able to get the bond, right? Because they could afford, and which sort of maybe misled a lot of people, and they did a lot of miscalculation, and mainly those are the people that are struggling, because you can only afford up to a maximum of 30% of your gross salary in terms of the bond. That's what the bank can give you. But most people, because they didn't understand this, right? When they were told what they could afford, they go for the whole 30%. Now, when the interest rate goes up, it means those people will not be able to afford anymore, because they bought at the highest end of their affordability, right? Which is the mistake that if you have not bought a property, you should look at that, right? When you buy a property, if you afford 30% of your gross salary, for example, you must actually, when you buy at 25% of your affordability and lower than that, right? Because you don't have to go all the way, right? You don't have to go all the way, because when the interest rate goes up, you're going to be affected, and now you're going to be looking to sell your property, which is not a good or ideal situation to be in, right? So now, if you find yourself in that situation and you decide to sell, then you must make sure that the agent that you're using prices the property correctly, or you become realistic in terms of pricing your property realistically according to the market, right? But you need to find ways to get out of this situation, right? And you need to be able to go back to the bank and really renegotiate your terms of repayment, right? The very much important note that you need to consider, or you need to take into consideration, is that the bank is not in the business of repossessing houses, right? Or blacklisting its valued clients, right? But you must know that the banks do not tolerate non-payments of their credit agreements, right? They have resources to ensure that they take legal action if you default. So you need to be considering that. But at the end of the day, they are able to assist you to solve the problem that you have. Now, after all, what you need to know is that the main source of income or profit for the bank is interest, nothing else. right? Interest is what actually benefits the banks, right? Because if we just break down how much money they make off interest, it will scare you. But let me not talk about that today. But you must know that the main source of profit for the bank is interest. So they always want to make sure that they profit from the interest that they charge you, right? And they don't really want to lose a lot of money going and taking legal action against you. So that's why they will consider someone that comes to them and approaches them willing to really follow and try to solve the problem with them, right? So, but in case that you do not take action, right, in time, right, before everything else go worse, right, the banks will take a legal action against you, right? So I just want to summarize down in terms of what they will do and what are the steps they follow when they take legal action against you. You should not allow it to be until this point, right? But just before, different banks uses, let's say, different methodologies or procedures, but overall it's more or less the same thing. They might just call it in different terms, but it's more or less the same thing. So if you're in areas between, let's say, 1 month until 6 months, the bank will contact you for you to make a commitment that you will make the payment at a certain point in time, right? But if you do not respect that commitment 3 times in a row, they will hand over your account to the relevant department that handles those kind of situations, right? And that department will give you, let's say, plus minus 30 days to rectify the situation. So if you are not able to rectify this situation, or you don't rectify it, they will take legal action against you, right? What does it mean that they will take legal action against you? They will get you to sign what we call a power of attorney. So when you sign that power of attorney, they will either sell your property, right, on your behalf, or you can also in this point choose to say you will want to sell your property independently, right? But just take note that when they sell the property, you do not really get much, because they sell the property to recover the money they've put into your house. They don't really care about you and what you will get at that point. They just want to recover their money. That's why some investors, they make a lot of money because they buy properties that are a bank repossessed, because those sell at a bargain, because the bank is only looking at recovering the money that is outstanding on your loan, right? Or you can choose to sell it independently. When you choose to sell it independently, you can really then determine the price that is market related. You can get something and then you can settle the bank what is due to them. And then if this process, the two process of the legal proceeding, if it didn't go well to rectify the problem for them to get back their money, they will blacklist you and they will repossess the house. Simple as that. So you need to try your best to avoid to be in this situation, right? So what I would recommend, that the moment you discover that you are struggling to make your bond repayments, you are struggling to keep up, then you need to approach the bank. But this is what you need to keep up in mind when you approach the bank, right? But always know the bank is willing to assist you, right? But first they'll make a risk analysis of you as a person, of you as an individual, based on your relationship with them, in terms of how long have you been with them, your account management, how well have you been paying before the recent scenario, your credit history as a whole, your current credit exposure, and the extent of your financial difficulty, and many other elements that they will do to assess you of how much of a risk are you, right? But at the end of the day, when you approach the bank, you must also assess your situation before, and then also bring with you to the table, bring a proposal of what you are able to do, right? So, like I said, in terms of approaching the bank, don't wait until it is too late, right? The moment you see things are getting tough, go to the bank, right? And you must take note that the person that is acting on behalf of the bank is also human. They will, at the end of the day, do their best to try and assist you, right? But one thing that is very much important is that you must remember, it's not the bank's fault that you are not able to afford your bond repayment. So you must keep calm, and you must leave your frustration, your fear, anxiety, and everything alone, and just keep calm, because some people might end up fighting the people that are trying to assist them and be angry with them. So you need to avoid that at all costs, and just know that at the end of the day, it is not the bank's fault that you are not able to keep up with your bond repayment. It is a decision that you have made, right? So keep calm with it. So what can the bank do for you, right? If you are in this situation, what can the bank do for you, right? So normally when a home loan it's structured, how it's structured is structured normally for 20 years as a home loan term. The term that it will take for you to repay that loan, it will be normally 20 years. Unless if you request for 25 years or 30 years, right? So people request for 25 years or 30 years so that they can be able to afford in terms of the installment. So you can also do the same. If you cannot afford the installment when it's 20 years, if you increase the loan term to 25 years or 30 years, then the monthly installment will become lower. But what you need to know is that in a long run, you will pay much more in terms of interest. But if a side of breath that you want to just breathe, if you just want to breathe in a short term, then you can do that. Now you can do that so that in the short term at least you are breathing. But when your financial situation increases or it's in a much better position, you need to rearrange again and go to your original long term so that you don't pay higher interest, right? Another thing they can do for you is it's what is called a holiday period. So they suspend maybe for 3 to 6 months period, they suspend your bond repayment, right? So that in that period you don't pay your installment, right? So that you can get your act together, you can get all your stuff in order, right? But what you must know is that the interest will still be calculated on the outstanding amount, and actually when you start to repay again, you will pay higher because you were not paying at some point. So these are the things that the bank can do for you. Tell me what you think about this, right? And maybe you can tell me, if you are in this situation, how did you get there, and what you can advise other people to do to avoid from getting into this situation, right? So that you help other people. I'm looking to hear from you and what you think about this video, right? So as you know, in this channel we talk all things real estate, all things personal finance, so that we empower you, right? It is the big elephant, though Courier Manager. I hope I have answered you, and this information is able to help you and help your family, because you know, when you are in a bad financial position, you know, it is not nice as a family, as a whole. It's not nice for the kids, for the wife, for the husband. So I hope this helps you and improves your financial situation. Cheers. I'm out. I'll see you on the next one.